if you had to surmise all of Trump's policy, one, you can say it is absolutely stimulative. And that's a good thing for the economy. It should stimulate and cause this engine to pick up steam. Second point is the risk is it's inflationary.
Yeah.
So if we put more dollars in all of our pockets, you and I are going to chase around that rare Jaguar that we both want. Mm-hmm. Obviously, totally hypothetical. Neither of us want a Jaguar, but you get the point of it of like, hey, whatever it is that you buy, there's more people that can afford to buy it and bid against you, driving up prices.
Alrighty, folks, we are so lucky to have a 10-year, 12-year Wall Street veteran on the channel. We're going to talk about, hey, what does Wall Street think about Trump's win? What does it mean for the U.S. economy in 2025 and there beyond? Taylor, how you doing, buddy?
Oh, I'm doing great. Thanks so much for having me. You're the man.
Oh, yeah, I appreciate that. So we talk once a month. The last time we spoke was pre-election. It's now over. The outcome is certain. I guess you could call it a red wave. But what does all this mean for the U.S. economy, in your opinion?
Yeah, so I just got done with Thanksgiving travel, and I was 6 hours down and back to the in-laws' house in Maryland, and I listened to podcasts for a lot of it. My kids were sleeping, and there was not much, if any, negative speak around what Trump's policy means for the economic backdrop at large. And look at the market, right? They're responding accordingly.
Yeah, it's pretty wild. I mean, it's really interesting. So obviously my focus is real estate, and I started talking with real estate agents, brokers, mortgage brokers, like by Friday or Saturday of that weekend. So the election was Tuesday. We knew about it, Wednesday morning if you're on the East Coast. And by Friday and Saturday, people are telling me it was like a light switch, right? Demand spiked. Now we've actually had economic reports, right? National Association of Realtors talking about a 12% increase and this, that, and the other. It does seem like the consumer, it's just like the outlook. The outlook's different, right? Heading into the election, everybody was paused and concerned. Now that it's over and now that it's known, it's like, hey, we got to go about our lives. We got to move forward. It's very different.
It's interesting. So I'll touch on kind of three pillars that I see as being the main backdrops against the economy. And then let's circle back to the real estate thing, because I have kind of a counterpoint to that I think might be interesting, that is a little bit more negative on the real estate side that may not be perceived at first glance.
Okay.
But three pillars as kind of I see them. And the first one being lower taxes. So this is a lower tax regime, no way around it. You look at it from the individual standpoint, it's not actually going to see a tax cut in all likelihood for individuals. It's just not going to see the increase that many would have seen if the Tax Cuts and Jobs Act from Trump in 2017 expired and sunsetted.
Yeah, they'll be renewed. There's very little question.
Correct. So on a relative basis to what could have happened on the other way, lower taxes for the individuals. Corporations, they're proposing lower corporate taxes.
Yeah.
So lower taxes outright on that front. And then there's a lot of tertiary, hey, you get a tax cut, no tips, get taxed and everything like that. And what of that comes to fruition, I'm not entirely sure. But lower taxes, by and large, is certainly an economic win. By the market standard, by overall, if people have more dollars in their pocket, they're going to spend them. We're Americans.
Yeah. That's we've learned that over the last 4 years. Whether it's free money or lower taxes, the U.S. consumer likes to spend.
Totally.
Yeah, I agree. There's very little question that the tax policy will be one of cuts at the corporate level. And again, I think extension at the individual level. And then you're right. There's all these other no tax on tips, no tax on this, no tax on that. We'll see where those goes. But generally speaking, it is believed that the U.S. consumer, the U.S. corporations will have more money in their pocket and less sent to the government. So that's number one. I agree.
Well, and I'll touch real quickly on the lower taxes, like the tertiary things that I was mentioning there. So one being no tax on Social Security. That I read an article this weekend is incredibly unlikely. Too much complexity there, as well as too much lack of revenue coming from it. The second one there, that's a big one, is no tax on overtime was proposed. And that one looks unlikely as well, because they said, listen, there's just going to be too many loophole games. Oh, this was actually overtime, this wasn't, et cetera. And that won't work as well. And then the third one that they did think was likely, or at least potentially likely, is the no tax on tips. And the reason they thought that was likely was it's a token impact. in the grand scheme of things. And then the other thing was that was also floated by the campaign of the Harris campaign as well. So they just thought that the Dems would support that, and that potentially could go through as well.
Yeah, I as I kind of see it, that's the one that does seem most likely.
And that's a boom for your hometown, right?
Yeah.
Vegas being such service oriented,
correct,
et cetera. So the second big pillar of the entire equation is deregulation.
Yes,
and you see that in a lot of different industries. So the easy one to think about to begin with is oil, energy. Drill baby drill was Trump's comment, and that was from however many years ago, but it comes right back up. And I read a really interesting article in Barron's this weekend about how AI was impacting the oil companies, and they've taken their break even from somewhere between $80 and $90 a barrel with the use of AI and other technology as well, but down to $40 a barrel in the Permian Basin.
Wow.
Yeah. Okay. And I didn't realize this. Like I knew that we had become a net exporter relative to the net importer we've always been throughout history. But also now I didn't realize how much larger we are of an oil producer than Saudi Arabia. We're 50% larger in oil production than Saudi Arabia.
Idea.
I didn't know that either. And so like you think about what that does at large, that takes the 1970s spiral of inflation largely off the table. It really, it really does. That was all a function of the oil embargo we experienced. And at that point too, you think about not only going to work and all the other things that were necessities at the time that were, driving oil demand that aren't there anymore. The world was much larger oil dependent than it is now.
Yeah.
Others, financials, obviously huge impact. Small cap companies have seen a massive rally. Their stocks have boomed since Trump's election. And you just think about it, one of the things that puts a bigger moat around these larger companies is their ability to pay for a lot of the regulation and red tape that's out there.
Correct. Yep.
And if that doesn't exist, that leaves a lower barrier to entry for some of these smaller companies to come in and kind of blossom.
Yeah, I love that. I've also heard in my neck of the woods, housing, right? Deregulation in housing. Again, the Fed can't do much because it's state and local, but they can do carrots and sticks to incentivize. So it does look like this regime will be a lot one for deregulation. Which again, many people are perceiving as a net positive. So what do you got for number 3? I think I can guess.
And I think that is hard to argue that that's not a net positive, right? You look at that in a lot of ways, shapes, and forms, and maybe from an ecological or environmental or something like that standpoint, it could be perceived as a negative, and I won't argue against that. But from an economic standpoint, it's hard to argue that deregulation is not a boom.
No, agreed.
Last one of the 3 pillars would be tariffs.
Yes.
And tariffs are one that the numbers being thrown around right now are pretty magnificent as to what the level of tariff to be imposed upon other countries. So, last week it was 25% on Canada and Mexico and an additional 10% on China. I didn't realize, another thing, shows my negligence. I didn't realize that Mexico is now our largest trading partner. We import more from Mexico than we do from China. And so everyone thinks about, hey, stuff that comes into this country, it's all Chinese, et cetera. No, it's more so Mexican than it is anything else.
Interesting.
And there are certain companies that will benefit from that. But I think at large, when you look more broadly speaking, tariffs are a headwind. To most forms of economic success. And the last one that was floated over the weekend was the fact that, hey, we're going to put 100% tariff. We're going to double the cost, essentially, of imports coming from BRICS countries if they don't back off on this non-dollar policy that they're trying to pursue.
Yeah, I think there's a lot of things in the tariff regime. Again, there's a lot of arguments about, hey, it's inflationary. Again, in the short term. Yes, of course it is. But you have to play chess, not checkers on this topic, I believe, because what's going on is this is just the gusto and bravado of a New York negotiator, right? He's throwing out these wild numbers, trying to force the other side to react. For example, when he did the Canada and Mexico, I don't know if you paid attention, but within 36 hours, a day and a half, he had conversations with Trudeau and the leader of Mexico. Forgive me, I forget her name. That's what he's going for.
Yeah.
That's what he's trying to do. He's trying to force communication, and he's trying to force behavior. On the Mexico front, I didn't realize we are the largest importer, but I saw a number that said something like, 30% of our goods come from Mexico. Big number.
Yep.
And then, but we only export like less than 2% to Mexico, because there's this conversation about tit for tat, and I'm like, you guys aren't paying attention. A 30% versus a 2%.
There's no tat. There's no tat.
Where's the tat? I mean, I don't get it. Right. So it is a negotiation function. The other thing that I think is kind of a long-term net positive, because I think tariffs in the short run being a year or less, any tariff it's either impacting margins because companies can eat some or all of that, which again will affect your world, the stock market, right? Of margins come down, right? PEs and all of that, or it gets passed on to the end consumer. However, if you're looking at having fairer trade, if you're looking at incentivizing manufacturing locally, the long term, assuming it's done as a scalpel, not a sledgehammer, we could be manufacturing more stuff, just like oil, right? For most of our adult life and your and I's kids' life, we were a net importer. Well, guess what? Investment and years go by, and now we're not only a net exporter, but we're twice the size of Saudi Arabia. Who's to say we don't become the largest manufacturer of some things? Right. I'm not talking about cheap plastic toys, but hey, maybe we become the largest producer of pharmaceuticals. Maybe we become the largest producer of PPE, right? We don't have to rely on people that don't like us for certain things. So I think longer term, if done correctly, tariffs will have us be the largest manufacturer of some things, which I think is a net positive.
Yeah, I'll point out two things on that. One, I think you are 100% correct in the fact that this is hey, let's start out here and walk back to here, right? And so the whole thing that was brought up last time Trump was a president was read the art of the deal. And the art of the deal means you sit down at the negotiation table and you just throw something that's bombastic and crazy at them. And you look at them like you're serious, and then you walk them out to something that's hugely beneficial to you at the end of the day. And I think that your point is well served in the fact that like the tit for tat thing, we are the biggest, most powerful economy in the world, bar none, with a wide margin. And
not even close. Yep.
The last thing someone wants to do is upset, the hand that feeds them, which is our economy at large. I'll push back a little bit on the fact that. And I don't mean that you're incorrect in the fact that, hey, we might be able to innovate and manufacture here in the U.S., but I struggle to think that at large is not inflationary, barring real innovation. So it took real innovation. It took, your oil example, it took us going from, hey, in Saudi Arabia, you can put a straw on the ground like that and it spits oil out of it. Like for, obviously that's hyperbole, but that's not that far from reality. In the U.S., you put a drill into the ground, it hits rock. Shale. You drill into the rock, you flush water and sand into the rock, and it forces out natural gas.
Right.
That's mind-boggling. I mean, that's crazy, but that's the innovation it took. But barring massive innovation like that, using domestic labor is in its own right an inflationary pressure.
No question.
So I think at large, the way I look at things is if you had to surmise all of Trump's policy, one, you can say it is absolutely stimulative, and that's a good thing for the economy. It should stimulate and cause this engine to pick up steam. Second point is the risk is it's inflationary.
Yeah.
So if we put more dollars in all of our pockets, you and I are going to chase around that rare Jaguar that we both want. Mm-hmm. Obviously, totally hypothetical. Neither of us want a Jaguar, but you get the point of it of like, hey, whatever it is that you buy, there's more people that can afford to buy it and bid against you, driving up prices. So that's the tax policy. Now, regulation that could bring down, that could be a net negative impact on inflation. So that's a good thing. But 2 out of 3, higher or lower taxes, inflationary. And then the third one being tariffs being inflationary. It's hard to make the argument that inflationary pressures aren't more significant if we're able to put through these policies that have been proposed.
No, there's no question on all of that. And again, we'll have to see what actually happens on tariffs. Again, I think this is more of the
Agreed.
New York negotiator. And again, maybe that's, for all I know, executive order number 1 is 100% tax on China, for all I know. I don't think, given the people that he's been nominating around him, that they're going to let that happen. He's made some pretty good nominations, right? There's that Wall Street guy. Yeah. So
Treasury Secretary.
we can talk about the Treasury Secretary. I think the market really liked that pick.
One more comment I will make on the lower taxes too. If we bring in less revenue, then that could drive up deficit, and that would steepen out the long end of the curve, which I know this is totally nerd talk, but what that will also do is be a pressure on how much we'll have to pay to incentivize folks to buy our debt. Yeah. And that is another kind of knock-on effect there. That is kind of the second line of thinking that is a pressure with this economic policy.
Yeah. Then the last thing I'll say about this, because I do want to get to your real estate comment you kind of teased earlier.
Oh, yeah.
Yeah, I talked about it. I looked this morning. The odds of a recession in 2025 are crashing. Yeah. I don't know if you saw this, but it's down to something like 32%. Pre-election, it was over 50. I think it was like 58 or something. I think generally speaking, people are seeing, to your point, deregulation, less taxes, all of that is net positive for at least 2025. But yeah, why don't you bring up your real estate idea?
Yeah. So it actually just ties into the last comment that I made there. So with higher inflationary, higher growth prospects, what that does is that drives up traditionally the 10-year treasury rate. And so if the 10-year treasury rate is higher in the fact that the market is thinking more future growth, more future inflation expectations, then what that's going to do is press up or at least continue to keep a floor under where mortgage rates are. Whereas I think if it went the other way, potentially there was more scare of financial duress, which would have driven down the long end of the curve, and that would bring down mortgage rates. Now, certainly the argument could be made that would also potentially bring down the economy more so, and people wouldn't be able to afford to pay even the lower mortgage rates. But I guess at large, a Trump election means potentially higher mortgage rates for longer.
No, I've actually told my audience to expect 7% mortgage rates for 2025. It's like, that's just where we're going to be. And again, it'll be another slow year. So at the end of the day, Trump victory does mean the economy is going to be changing. It'll be interesting to see what actually unravels. We're going to be talking once a month, which I appreciate. But if somebody want to know more about life goal investors, where do we send them?
Yeah, go to we're on TikTok and Instagram. We do 60-second clips every day on just, hey, here's what you need to know right now kind of thing. And then go to our webpage, Life Goal Wealth Advisors, and then you could sign up for a call at Life Goal Wealth Advisors /introduction.
Awesome. Thanks, buddy.
Thank you.